Welcome to this explainer. Today, we're putting on our financial detective hats to track down accounting errors by mastering the ultimate truth serum of double-entry bookkeeping, the trial balance. If you're balancing the books or just want to truly grasp the mechanics of accounting, this is absolutely crucial. It's where the rubber meets the road. Here's our game plan for today. We'll start with an introduction and balancing the accounts, move into mastering the trial balance itself, check out errors that actually affect the agreement, and finally, hunt down those sneaky hidden errors. Starting off with Section 1, Introduction and Balancing Accounts. To really get the macro picture of a business's health, we've got to master the micro mechanics first. So what is a trial balance really? Our notes define it perfectly. It's basically your mathematical checkpoint. Its whole job is to verify that your double entries and calculations are spot on before you even touch the final financial statements. It's kind of like your early warning system. Check out this example from the notes showing balancing off. Notice the calculation here. You've got an RM200 debit balance, say from an asset or expense account, and an RM $18,200 credit balance from a liability or revenue account. These are finalized as the balance brought down. Those exact finalized numbers are what you literally pull straight from the ledger to build your trial balance. The trick here is knowing exactly where to put them. There's a golden rule. Asset, expense, and drawing accounts, they always go to the left, the debit side. Liability, capital, and revenue accounts, they go to the right, the credit side. Mess up this mapping, and your whole balance is going to be off right out of the gate. Moving to Section 2, Mastering the Trial Balance. Now that our ledgers are balanced, let's actually build the thing. Preparing it is a breeze if you follow these 3 steps from the notes. First, state the business name and title with the date. Second, list your debit and credit balances in their proper columns based on that golden rule. And third, just total each column up. When you look at the standard format, it just makes sense. You can see how cleanly assets, drawings, and expenses live on the debit side, totally separate from liabilities, capital, and revenue on the credit side. It takes all those messy ledger entries and brings total order to them. And when you nail it, it looks like this completed example for Idina Enterprise. Both columns agree perfectly at RM 33,100. Look at the math. Your bank, receivables, cash, utility bills, rent, wages, and drawings on the debit side exactly match payables and sales on the credit side. When you see those matching totals at the bottom, it is the best feeling in the world. Section 3, Errors Affecting the Agreement. But what happens when you tally it up and those bottom numbers don't match? This is where the detective work kicks in. We have to separate mistakes into 2 buckets. Errors that actually break the trial balance agreement, meaning the totals literally won't match, and hidden errors that completely bypass the system. Let's look at the ones that break the balance first. The math behind a transposition error is honestly fascinating. Look at this example from the notes. You make a cash sale. You correctly debit cash for RM $2,768, but then you accidentally credit sales as RM $2,678. That tiny little flip of the digits, it creates an RM 90 difference that completely shatters your final balance. Then there's the classic addition error right inside the ledger. In this example, the cash account has 2 sales, RM 1200 and RM 1000. Obviously, that should be RM 2200. But if you quickly add it up as RM 2000, you're suddenly shorting your debit side by RM 200. The trial balance is going to flag that miscalculation immediately. Or take the single entry error. Here, an RM 200 rent payment was properly credited to cash, but the debit to the rental account completely forgotten. Since only half the transaction was recorded, your trial balance is naturally going to be off by exactly RM 200. And this one is just brutal, the transfer error. Your ledger calculation could be completely flawless, but if you drop a 0 while moving the number, you're in trouble. Here, the sales account perfectly totals RM $5,500, but transferring it as RM 550 to the trial balance, that careless slip instantly breaks your agreement. Section 4, Hidden Trial Balance Errors. Now we're looking at the invisible threats, errors where your columns match perfectly, giving you a false sense of security, but your books are completely wrong. Our notes highlight 6 culprits that completely bypass the trial balance truth serum. Because these errors somehow maintain the mathematical balance of debits and credits, they can just hide in plain sight. Let's dive into a few specific examples. First is an error of principle.
Check out this RM250 van repair. Mathematically, RM250 was recorded on both sides, so the calculation balances. But conceptually, it's totally wrong. It was debited to the delivery van asset account instead of the van repair expense account. The math works, but the accounting rule is completely violated.
Compensating errors are wild because it takes two totally separate mistakes to cancel each other out. Check out the calculation here. First mistake. Credit sales of RM100 were wrongly credited as RM1000, making the credit side RM900 over. Second mistake. A cash purchase of RM1000 was wrongly credited to accounts payable as RM100, making the credit side RM900 under. Plus RM900 and minus RM900 equals zero difference. The errors compensate, and the trial balance stays perfectly yet incorrectly balanced.
Next is the error of omission. It's exactly what it sounds like. An RM130 cash sale happens, but it's entirely left out of both the debit and credit sides. Because you added 0 to the left and 0 to the right, the balance doesn't change. It's a total ghost transaction.
Finally, the error of commission. The amount is right, the category is right, but the specific personal account is wrong. Notice here, a credit sale of RM600 was made to Ahmed, but it got debited to Ahmed's account by mistake. Total receivables are mathematically fine, so the trial balance agrees, but I guarantee Ahmed is not going to be happy getting Ahmed's bill.
So I'll leave you with this thought as we wrap up our explainer. A perfectly balanced trial balance proves your math is right, but as we've just seen, it definitely doesn't prove your counting is flawless. Knowing about these hidden compensating errors and omissions, how confident are you that your perfectly balanced ledgers are actually telling the whole truth?